Hello, good morning. It's Binni here. Nice to see all of you here. Today we are doing a live streaming to YouTube. So if you can't attend through the full session, you can use the same link to watch the streaming again. That means the recorded version. How are you? Are you guys good? I've not seen a lot of you for many months and many years already. I usually ask whether you have your breakfast or not. I think it's a little bit late. Okay, we are still waiting for some of the people to stream in. All right, because time now is 10:30 in Singapore. We have I think quite a lot of overseas viewer. All right. So today I'm going to do market outlook. By no means can I predict what happens in the market. I'm just sharing with you what myself I'm looking at. All right. So if you can, do let me know your questions. I can see a lot of familiar faces already. I mean, familiar names. William, Chinon. Okay, morning. All right. So let's get started. What I'm gonna do after today, after this session, go Orchard. I'm going Orchard, so maybe that I can see you guys there. Yes, I'm actually official on leave, and then so I'm going around, really going around, enjoying finally, this year where we can really be going around. Okay, so let's get started. All right, so as usual, the disclaimer. I just wanted to read out the disclaimer. Whatever that I'm covering here is really for education. All right, it's by no means financial advice. So I'm not qualified to provide one. I'm just sharing with you my own observation, my own experience. So if you need to get some official financial advice, please get it from someone who are qualified to provide you. Okay, for those who've known me, right? So if you start out with Terra Seeds and then continue with us into online forex master, all right. So it's a total of actually I wanted to share a slide here. This is the slide I've prepared, right? So what is the meaning of 15? So this year is very important. 15, I'm not sure you guys know what's the meaning. Anybody knows what's the meaning of 15 when I put some balloons here and I wrote the number 15 here? Can make a guess? 15. 15 is a wonderful number. It's double digit. It's a good number. At least it's not 20 yet. So 15 is the I think that some of you can make a guess already. It's the number of years I've been in this industry. All right. So recently I've been meeting up with some students who are still with us for 15 years. So I met up with a couple of you guys. All right. I'm not sure whether you are here today. All right. So 15 is how long I've been in this industry. 15 is how long I've started training. I've started in this industry really. All right. So I'm glad that I took the right path. Okay. So I'm glad that some of you are still with me. All right, in this journey. All right, I mean, for example, I can know your names and for example, Helmi really, and William also. All right, so that's really long years. Okay, so but I didn't start trading 15 years ago. I started my trading lives very long. So that's really like maybe more than 20 years. Okay, so all right, just a little bit for those who don't know me. So this is me. This is me, and to sum up, I love this industry, and I still be in trading, investing. Just share a little bit about my investing and my trading. All right, I'm not really totally 100% trading. I build portfolios. I build portfolio for myself. All right. In a way that can I stop working right now with the portfolio I have? I can stop working right now. That means I don't need to work. I have that recurring income. Okay, so that's passive recurring income. I tried not working for 3 years when I was aged 38 years old. Sorry, 38, yeah. I think it's not very suitable for me. All right, I have to talk to young people. I mean, myself is young too, but then I talk to people. That's my personality. I look at the investment vibe. I look at what to invest, you know. So it's not, I can't be, you know, out in just an staying in island. All right. So that's why I'm doing this. Okay. So one of the things I really love, all right, is that automation. So I'm working a lot on automations, helping clients to automate their strategies. The clients are really corporate clients. So yesterday I met up with another corporate clients who are interested to do automations, and that's one of the a team in a bank. All right. So these are things I love. Okay, so you realize that in the recent development, ever since that TerraSeeds had a bit of transition, we did a lot of automations. All right. So my investment, and this is why every year, if Regina is here, Regina will know that I'm talk about what leads to that I'm investing, and then what I'm doing. Even when I was like about to give birth to my daughter, she's 8 years old this year. All right, and about to give birth already. I actually went to queue to buy gold bar at UOB. Okay, so that's part of the investment, you know. So I have bonds in my portfolio. I have stocks in my portfolio. I have REITs. I have unit trust that pays dividends. I also look at ETFs. I look at stocks. I also trade. Okay, and you know that, for example, I trade in the forex. I trade in the stocks. And if you did like attend my other courses with other partners, for example, SGX or some of the banks, then you know that I have things which are with the futures, then even with the DLC, especially with the Hong Kong stocks. Okay, the only thing that I'm not very active in is I'm actually not very active during the times that I'm sleeping. Okay, because I value the sleep, right, more than that investing. So you know that I will sleep. Okay, I'm not sure whether you know about this singer George Lam. All right, so he also need to sleep, you know, for example. So I'm like that. All right, so automation is something that we're gonna move to, definitely, and I've talked about some of the plans later on for TerraSeeds as well. Okay, so yes, 15, it's my not trading years, but my years in the industry. All right, some of the players I've seen in the early years, they are no longer around, or maybe they have ventured into other things which are a little bit more profitable. I don't know. There are some other people who tried to copy our strategies, and then I've not seen them, so I'm proud to be here 15 years. Okay, so let's talk about what I'm going to do today, which is the market outlook for 2022. I won't say even the whole year of 2022. I just shared with you what I'm going to do. Okay, my analysis, you know, you might want to use it as an indication. All right, the other one I want to bring up is that I want to cover the whole aspect of indexes and key indicators. Rather than to give you, for example, the specific stocks I'm looking at, I'm more interested to let you know how going forward, in any case where the market is moving very fast. Okay, I won't even use fast, furiously. All right, where changes are really hard to anticipate. Right, how to use whatever that I'm sharing today to analyze. Okay, they are not difficult. They are actually very easy. So you can just take that to use it for your own analysis. All right. Today it's not trading focus, all right, but more on a little bit about building your income. Okay, building going forward where we are heading into uncertainties, you know, where we still have that a bit of a recurring passive income. All right. And I started talking about this one back when we are still in Shannon House. Remember that I talk about what are the REITs I'm looking at, and then how we can build that income investment focus. All right. Okay, so that's the key thing. And once I finish that, please also stay a little bit longer to talk about the future developments that myself I'm moving towards, in case is really something that you're interested in. All right. Okay, indexes. By the way, today's session will be probably about 1.5 hours. Okay, so it's probably about 12 o'clock. All right, so if you need to go out, walk a bit, because there won't be any breaks. I'm just gonna go and then talk about 1.5 hours. All right, and if you do have questions, please ask me at the chat box. Okay, so the first one that I'm going to share is this index, which is not VIX, but it's called VIX of VIX. I'm not sure whether you heard of it, but basically it's VVIX, which is the volatility of VIX, divide by / VIX VIX. Okay, I would be also sharing with you how to get this index right onto your chart. Okay, but let me just cover this one. I think the first question would be, for example, whether the US market will correct. Because if the US market is to correct, the world indexes will not be spared. Okay, so this is like a known truth. Okay, we know about it. All right, so I want to, we are talking a lot about VIX, all right, VIX, which is the measurement of the volatility, all right, meaning that, for example, VIX is to use the S&P 500 options to understand what is the volatility, all right? But VIX sometimes is very tough, okay? So one of the other means of measurement is to take the volatility of VIX divide by VIX, okay, which is to get you the volatility of the volatility, to basically see one thing, all right? How complacent the market is, or how extremely scared the market is, right? For us to know when it is going to be the peak or when it is the bottom for us to pick something. Okay, all right. So let me just go and show you where to get the VIX of VIX, all right, and talk about how to use the VIX of VIX and my interpretation. All right, so here I have, which is a trading view chart. Okay, I'm not sure any of you are using TradingView. I think you are. All right, so I'm just going to go through the TradingView. Okay, so how to get the VIX of VIX and something that looks like what I have on top here, which is the blue line. All right, so go to this place where you do the symbol search. You have to just do it this way. Key in VVIX. Okay, so you're gonna get the VIX volatility index. Okay, then use the divide. That means the slash, the backslash or forward slash. I also don't know what's that. Just the back. That's just the slash, okay? And then divide by VIX, okay? So it's just a mathematical formula. Divide by VIX, all right? Then you're gonna get this, chart here, which is the outcome of the VIX of VIX, the divide by VIX, and you're gonna get VIX of VIX, Okay? So you're gonna get this chart here. When you get it, you won't be seeing it as a line chart, but I just switched that into a line chart for easy measurement. All right, so you see that as a line chart and switch that into a weekly chart. So the idea of how to use that is to know where there are periods of calm, okay, in the market, all right, or where there's periods of complacent in the market. Okay, complacency. All right, so I just overlay the SPY here, which is the ETF of S&P 500, right? And then let's take a look. So traditionally, if you look at what happened during 2002 March, where we have the huge drop due to COVID, right? Then the VIX of VIX stayed at the low level, which also means that, for example, when you have the VIX of VIX, which is heading into the low level, all right, in the region, so there's a band that the market will use. Okay, so we are taking this fixed value here. So this fixed value is where the market will say that, hey, look, all right, it seems that there's extreme volatility, extreme fear. Okay, because of this extreme fear, people will do what? They will just keep on selling. Perhaps that it is where we're going to pick the bottom. Okay, so when you have the VIX of VIX staying near to the low value, right, where the value that the market recognizes is in the region of around 3. Okay, because we have, and historically we saw that, right, during each of the low price of the VIX of VIX, right, that's around the 2.5 to 3. And the 2.5 being reached was during the COVID period, peak of that COVID scare, right? And then the index reached into about 2.5. Okay, but if you take a look at historically what happens, all right, most of the time the index would be into this level here where I marked in, it's about 4. Okay, about 4. Then we're gonna tally into a market low. Okay, all right, we're gonna have that as a market low anywhere that's probably below 4. Okay, we have here slightly around 4, below 4, and that hits into one of the market low here. Okay, so this is one of the measurement that I will use very, very often, and it is during this very special occasion that I'm sharing with you to use the VIX of VIX to hopefully identify a market low. Okay, so during this low value of VIX, I mean, I don't think that we hope to see 2.5 or 3 again, because that probably means a huge drop. Okay, a huge drop, a huge scare in the market is not something that I want to happen either. Okay, so I'm looking at a healthy corrections into the numbers that I marked in here, which is probably around 4 plus. Okay, I can't give you that very exact number. We can only refer to what happened historically. About 4, and recently, the recent drop, it hit into near to 5, where 5 was seen as one of that low in terms of the VIX of VIX. Okay, so just take note, all right? Get this index into your chart, keep it in your watch list, or occasionally browse it, and look for VIX of VIX to be near to the 4 to 5, and that's probably going to point to an interim market low. Okay, why do I say interim market low? In case there's some special event is going to hit right into the 2.5 to 3, and that could be really one of the low in the market. Okay, so magical number, I think it's about 4 to 5, but extreme numbers is about 2.5 to 3. All right. Okay, then where is the market top? All right, how do we know that it's a market top, right? So historically, we've seen that any numbers that's around 7 to 7.5, all right? And of course, that there was this extreme number here, that's probably in the region of 9 to 10, right? So I view that as more of an outlier. So a number that is probably near to the 7, right, or 7.5, near to the 8.5 region would be seen as a peak. Okay, so what is the number here right now at 6.3? Okay, so 6.3, if you look at what happens in 6.3, and that's probably saying that the market is still a little bit complacent, even though it is coming down. So there seems to be a lot of still interest in it. Okay, now when this happens, when there is a continued rise in the value, all right, at the same time followed by correction, right, then it means that when there should be a correction really coming in where the market is really very painful, right, meaning the correction that's huge where it causes a huge pain, then the market is likely going to correct deeply. Okay, I know that you've known that even with the FOMC this week, all right, they are increasing the rate of tapering. Initially, the market reacted quite positively, the stock market, but we know that when the dust is settled, US actually had a drop yesterday. Okay, so just look out for the VIX of VIX, going slightly a little bit higher, right? And if it does, and the market starts to really continue to drop, the index starts to drop and continue to drop, and that's where we probably know that it's a little bit toppish, and we're just waiting at the bottom to maybe pick up some. Okay, you can add stocks to compare, definitely. So you can I mean, it must be of value, right? So you can do things like something divide by something. You can do that in TradingView. Okay, so it must be of value. All right. How do we do the overlay? I won't cover in this section, but just take a look at this one here, which is this small little plus button. All right, click on it, and then you can just say, I want to have SPY overlaid into a chart, and you can choose whether you want to do it in an alternate pane or etc. Okay, yes, there'll be a recording. You just have to use the same link. You can view the recording already. All right, okay. So that's one of the sharing in the VIX of VIX, and let me just move on to the other use of VIX of VIX, which is as a form of divergence. Okay, with this, perhaps you might also come to the same conclusion as what I had. All right, about the market. We just have to be going forward into 2022. Okay, we have to be a little bit more careful. All right, it's not that market that would it's probably my view of the US market is still going up, okay? But we might have to really look out for a buy only when it corrects. And this time the correction might be a slightly steeper in correction, okay? I might be wrong again, and that's my view, all right? So let's take a look at the VIX of VIX, right, in terms of another usage. And I'm actually right now at the day chart. Now, one of the things, remember, if you have attended my lesson, I actually talk about that the US stocks could be topping around here, and indeed it moved down. The reason for calling that, for saying that, was also because of the tall signal that we are always using to trade. But the other reason is that you can see very clearly there is a divergence. Okay, so as for example the index, which is this is the SPY. Okay, so what I have here is the SPY, which is the S&P 500 ETF. All right, it's heading higher. Okay, so that means that price is actually going higher here. We can see that there's a bit of a divergence coming in from the VIX of VIX. That means the VIX isn't going higher. Okay, so same thing where we had a bit of a correction, all right, and then but the price is still near to the top. That means that if you compare the high of 1 and the high of 2, all right, we can see that bearish divergence coming in, all right, in the VIX of VIX. Okay, same thing, is not to the extreme yet, but the divergence can be very, very good close. Okay, so one of the things I talk about in my usual session is, for example, where we had a short in the indexes, I'd say very clearly, very strongly that we need to take profit, because that the VIX of VIX was at the 5, okay, which is one of the known low level. Okay, all right, so that's something to use, right, in the daily chart to look at that index in a divergence manner, to compare the VIX of VIX, all right, and then to the index, which is S&P 500, which I like to compare to, and to use divergence in your own analysis. Okay, so for example, coming to this one here, all right, I think that that there is a chance for the US index to continue lower. All right, so now not only that I use VIX of VIX and I use VIX, I also use COT, which is the Commitment of Traders. All right, and you know that I'm using COT, and this is rehashed into what I've presented. So what is the use of Commitment of Traders? Okay, so it means that we are looking at the futures market and trying to find situations where the market, right, is extremely net buy. Okay, so for example, anything that's above 0 will be an extreme net buy situation. Okay, now why is it important to know where the market gets extremely net buy or net sell? So anything that's below here, right, less than 0, it's where the market is extremely net sell. Okay, anything that's more than 0, the market is in an net buy situation. But we're interested to know is when the market gets into an extreme situation. Why is it extreme? Extreme means that, let's say for example, we won't have unlimited money. Okay, I'm not sure whether any of you have unlimited money. Let me know if you have unlimited money. Okay, I'll be happy to engage you. Okay, so under assumption of there's no unlimited money, if we keep on buying, one day we will run out of money, right? Okay, so when we run out of money, and that's where the market, and you have to sell. Okay, the market will sell, you have to sell. All right. So how do I know that the market is in an extreme net buy situation, net long situation? It's where I take reference to the history. So historically, all right, we can see that this level that I've just marked in here is suggested as an extremely net long, net buy situation. Okay, now we are not near to that extreme level, but neither are we at the extreme net sell. Okay, the net sell, extreme net sell would be somewhere around here. Okay, we are not there. All right, so we are near to the top here. The question will always be whether this is the high, because then we're going to take reference from what happened previously, All right, so for example, this was one of the historical level back in 2015, and after this, right, the index had a bit of a correction. Okay, same thing. All right, is this going to be that extreme net long situation? Okay, we can't answer that because there's still one more level, but I always analyze it together with that high here. Okay, so therefore, right, it's very important for me to know one thing, all right, that the previous high, it's not broken. Okay, so based on the COT at this stage here, together with the VIX of VIX, right, I think we're gonna have a difficult time for the US market. Okay, generally it's not as if that you're gonna just throw and then the stocks that you buy would be profitable. We have to be selective. Not saying that it is going to be down, but I'm saying that two things only: one, selective; number two, a correction is something that would be more feasible for buy. Okay, that means that we are looking for really a correction. Okay, all right, so in any case, if let's say the index really corrects, I would have to admit that the US market is still one of the best market to invest. Okay, even though I sleep at night, yes, I do. I mean, I sleep early at night. I still have quite a huge fair bit of investment into the US market, not selective stocks, okay, but as a whole basket. So I invest in the unit trust that pays dividends for the income while it's going up. Okay, so just to share with you, during that COVID, where that 2020 March, okay, I bought in quite heavily into the US market in terms of unit trust, somewhere around here. First time was here, all right. Second time was actually near right to the bottom. Okay, and along the way, not only that I collected income per month, all right, because of the dividend that it's paying, I also benefited from this rally. So yes, even though I sleep early at night, I still pay a lot of attention to the US market. All right, so therefore, if the US market, if the indexes really corrected, then how do I know that this correction is going to be the end? We assume that it's going to correct, right? It's going to be the end, right? So these are very, very simple tricks that I look, and it has to do, I use, and it has to do with human mentality only also. Okay, and I assure you, this is also how some of the big guys, the funds and whoever, they are measuring. Okay, so because I work a lot with these people, I can't tell you exactly what they are using. All right, because then I don't have experience with all of them. But even if I do, under the NDA, I can't say. But I can assure you that this method that I'm sharing with you is also something that they are looking at. Okay, in a more mathematically, a bit more of a sophistication. Okay, so therefore, if we assume that the S&P 500 is going to correct, all right, I think the question you guys are asking me, how much is a correction? 5%, etc. So we take a look at historically. So historically, back in 2019, all right, the S&P had a correction. Two things, okay, take a look. I'm just using the SPY as an example, okay, but you can just take this and apply to any of the index. Had a 20% correction and a 60 points correction, okay, so two numbers here, 20% correction and a 60-point correction. All right, so if you take a look at what happens in the history of percentage in terms of correction, right? Anything that is in the region of about 12%, okay, 12 to 15% for the US market is regarded as a bear market. Okay, the extreme situation would be where you have a correction of about 18 to 20%. It is still considered a slight, I would rather say that it is a bear market, but it is not that bad as a bear market. Okay, so we had 2019 a 20% correction. Now back into this place here where we had the COVID. Okay, this correction was about 30+%. I see this as an outlier unless that we're gonna have other new things that's gonna scare the world. Okay, not a COVID variant, but other new stuff. Okay, otherwise I don't think that we're gonna have such a steep correction. Okay, so in the past, what I did is I mapped out, right, some of the bit of a serious correction. So this one here, back in around Sep, 2020 Sep, there was a 10.7% correction, or 3 points, okay? And then the other one, the more recent one, we had about 6.2% correction. Okay, so going in this mode here, I would think, okay, number one is that if there should be a correction based on the two indications, all right, we are looking at two numbers, okay? Of course, then you're going to say, hey, look, a 6% correction might be something that you want to look at, all right? But in an extreme case, let's talk about an extreme case, right? What kind of attractive correction that you want to expect? I would think that historically, we might be looking at a 10% to 12% correction. That means from the high, a 10 to 12% correction will bring us near somewhere around this level here, okay, on the S&P 500, all right? In the extreme case, I would think a 20% correction, okay? Not saying that it won't happen, because we are talking about a rate hike now, although at this moment for the US, the market sort of think that the number of rate hike will not be that many, okay? That's why it didn't correct that badly, okay? The market is still good, but I just want to bring out historically for S&P, we have 6 and we have 10, okay? And lastly, we have 20. So these are all the numbers that you want to track, okay? And then look at it, all right? So let's think about the Nasdaq. Okay, same thing. What I have is not the index, but the ETF, okay? Because then the reason why I use ETF is because you might want to buy it for your investment. All right, so you don't buy the index, but you buy the ETF of an index. Okay, so Q is the ETF of Nasdaq, and again, if we look at a correction in the past, okay, so for example, we have this one, which is the COVID correction. So I don't think that this will happen. But in any case, historically, we've seen in the range of 14, 12, 11.8 here, and 8.4. All right. So it's consistent with the acceptable percentage, right, of a correction that is not resulting in the bear market. Okay. So the market seems to accept a 12% to an extreme level, around 12%, right? Usually it's about 10 to 12% as a correction percentage for a not yet bear market correction. Okay, so anything which is slightly a little bit beyond 12 is still acceptable, right? But when you head into, let's say, the 15, all right, and the 20, then that is going to be heading into the bear market. All right, so to be still in this uptrend, so we have few numbers here. We have the 14, okay, and then we have the very, very logical 12% in terms of correction here. Okay, all right. Okay, next, let me just, okay, so next, this is the Dow Jones. I don't think that I need to explain that. So we have few numbers here that are mapped out. Number one, a 20% correction that we know of already, because Dow is probably not going to differ too much from S&P 500. So Dow is 20% correction. All right, so I don't think that this will happen. All right, I mean, again, that perhaps it might, but at this moment, I'm a little bit more hopeful. Right, so we're going to have a few magical numbers for Dow. Again, that Dow component is very small. I mean, compared to S&P, it's about 30 stocks only. So I have DIA here, which is the ETF of Dow. Then here we have about 10% average as a correction. Okay, so how to measure this correction? Take the high. All right, measure from the high where you're going to look for 10%. Okay, later I'm just going to share another one, which is not really percentage, but in terms of points. Okay, so for index, usually I look at percentage correction. All right. Whether it breaks the previous high or not, okay, just answering Pauline's question, whether it breaks the previous high or not, it doesn't really matter anymore. All right, what is more important is that as you start to see, for example, I think that that's a valid question, but as you start to see the Dow, for example, the current extent, that means that the rate of it's actually going up, it's a little bit less steep. Okay, so for example, this was like that inclination, that angle angle degree, right? But then as you start to see the current movement here, it's getting a little bit, my drawing, it doesn't do justice to the chart, but it's getting a little bit less steep. Okay, I think that you just observe here. All right, so the highs based on each of the correction, let's say at 10%, the high would definitely be broken. Okay, that's my point. All right, so if this is the case and if the low is being broken, then we might not look only at 10% correction. We might head to the next one, which is about 20% correction. Okay, so I can't update you because I've not seen the low being broken yet, and it has not been broken yet. But if it does, then I would be updating you in the regular lessons, and I'll be thinking that it could be a 20% correction, or at most before we head to 20, it might be a 15% correction. Okay, just to share a little bit with you, right, is that it is a known fact that Binni, myself, don't know how to buy when things are at the high. Okay, because I built really my portfolio when things corrected because of my years of training. Okay, I've interacted with some of the really very successful rich men. Okay, they're not traders. Okay, they're rich people in the world. Okay, so they shared with me and said that when there is a crisis, and we know that, okay, when there's a crisis, is actually opportunities. Okay, so all of us know that. It's just that when during a crisis period, during when price is dropping, sometimes or many times we dare not enter. We will be scared and we come out with any justifications not to do it. Okay, but because of my positive experience, okay, I will do very well when things corrected, and I'm actually looking for correction. Okay, so that's my training. That's a bit built inside already. So I want to look for corrections, and I think correction will be something that could be expected in 2022. Okay. Okay, so let me just continue, and that's okay. Now I'm just gonna cover dollar index quickly. Why is it so? All right. Through the years, my own investment has changed, and I have amassed quite a lot of investment because of proper management, right, in terms of my loan. Okay, my students would know that I'm one of those who not only invests, but I've made use of money, all right, cheap money. And we know that in the past 10 years, ever since QE, all right, there's a lot of cheap money out there. Okay, so when you want to grow your wealth, you cannot just use your own money also. I'll not say cannot. You might want to consider to use other aspects of money that you might have. Okay, so one of the index, partly because I'm trading into the forex, and it works very well. Remember that during the COVID period, the low, I talk about buying into Aussie. Okay, I talk about buying into unit trust, all right, but with AUD inside. So not only that you will gain from that stock, you will also gain from the forex appreciation. Okay, so this is something that as an overall investment we need to consider. We can't be just looking at purely the growth in terms of your stocks. Okay, it has to be complemented. So that is always what I believe. All right. So dollar index is something where I look at very much. And if you look at recently what happened to the dollar index, the dollar has been going up. So by right, when the dollar is going up, okay, and that's where historically we've seen a lot of harvesting. In the Chinese, right, they talk about 收割. 收割 means that you really harvest what you planted. All right. So when the dollar index is going up, it means that a lot of time the weaker countries indexes, stocks would be heading down. Okay, and that's what, if you remember what happened to Asia financial crisis in 1997, all right, a lot of hot money, US money, flooded into the region to buy into assets. Okay, and that was when they have appreciated the dollar a lot so that they can buy cheap all right, the cheap Asian indexes or countries which are affected very much in the financial crisis, all right? Okay, so why I pair this with Eurosing is because Euro has been used as a currency in the loan. That means that I have Sing dollar right now, okay, and Sing dollar has a lot of interest, very high interest, higher interest. But if I were to switch my loan into Euro, you realize that your interest that you're paying is so much lower. All right, so this is a little bit like the Japanese yen, where they switch that into Japanese yen for that low interest. Okay, so if you take a look at what happened for the dollar index, when dollar was indexed, it was low. All right, the euro sing. All right, the euro is at the high, and then it continued its descent. Okay, so when the dollar index is at a high, for example, what is the high? We've seen the dollar index DXY hovering between the nice level of 90. Okay, it can sometimes be at 89, it can be at 88, right? It doesn't really matter. Hovering around the levels of 90 and hovering around the high levels of 100. It can spike a little bit, it can go to 103, it can be 101, but the whole idea is that it is not at 90. Okay, so the dollar index right now is on its way, after completing the double bottom, on its way to go up. Okay, we are not near to the 100 region. All right, it can go to 99, it can be 98, right? Okay, we are not near to the $100 region. All right, and I believe that with this, the Sing dollar is going to be strong, partly because MAS already said they want to strengthen the Sing for inflation, and the world is facing inflation, and MAS is not managing inflation via interest rate, but via currency. All right, the basket of currency, Sing dollar. And with this, I think that the euro is probably going to, euro versus Sing is probably going to strengthen a little bit. All right, where $100 becomes an indication for euro Sing to be near this level again. Okay, now why is this important to me? All right, because I use this actively to manage my basket of loans. That means I switch my loans around, right, so that I can maximize my percentage gain. So for those who are considering stocks and building a portfolio and actively wanting to to manage your money in a more active way, you might also want to track into what I'm doing right now, which is the dollar index and euro Sing. Okay. All right, I can't answer all your questions. All right, so I will try to answer them later on if I have time, but I'm just going to proceed with the session. Okay, but do keep your questions coming. Just give me a minute. Okay, here we go. All right, so again, looking at COT, the conclusion that I have, all right, there will be more room for the dollar to rise. So even we have things like the Fed is looking at a rate hike going into 2023, and the market is not viewing that hike as a lot. I see that perhaps the US dollar is going to separate a lot more from the index. So traditionally, we think that a rate hike is going to be bad for the stocks. Yes, I'm thinking of a correction for the stocks, right? But I'm still positive in the stock market. That means that after the correction, it's probably going to go up. Okay, but the other side of what the DXY is telling me is perhaps the dollar has more room to rise. Okay, so that is what I'm looking at for the DXY. Potentially dollar might be heading a little bit higher to really push for that $100, 100 in terms of DXY. Okay, so that's the conclusion I have. Okay, in the dollar in case that you're going to use your loan actively to help you manage into your investment. All right, now I want to cover copper. All right, why is it that it's copper? because, and why we call that Dr. Copper, right? Because if you just Google a little bit, you go to Investopedia, and also a lot of investment sites, right? You would know that copper is a leading indicator of economic health. Okay, so back during where 2019, during the US election, remember we covered in our lessons, we covered copper. So we use copper as an indication to help us understand whether the market is going to go up or down. And we've seen copper breaking out of the base and going up. Okay, so that's usually what I would do. All right, and copper is linked with, all right, because why copper is being used, as you see here, being used widely in a lot of applications. So people look at copper as a leading indicator, all right, and then as a leading indicator to the health of the China economic condition. But I don't think that it's only on the China economic conditions. I think that it's more of the overall world economic conditions, because a lot of things right now, a lot of goods came out from China. So if there's no demand, so China will not be producing them. Okay, so that's why I want to look into copper, right? Okay, so let's take a look into copper, right? I have copper here. All right, sorry, this is not Euro saying, this is SPY. I make a wrong label, so let me just change that. So this one is actually SPY. Okay, now if you take a look at the copper in terms of historically, all right, each of the high in copper, all right, had a high in the index. Okay, all right, so we have a bit of a high here in the copper. Look at here, there was a slight correction. Okay, and during 2019, we talk about copper. Copper broke out of this base here in 2019 election year, right? And then copper moved up, and we start to see that the index actually going higher. All right, so without a lot of historical data on copper price, what I have here is that copper right now is near to a high. Okay, so this is the high of copper based on historical price, high of copper. All right, it is still part of this uptrend here, but I want to see that copper is near to the high, and if this is so, and it's going to gel with the other analysis that I had earlier, which we are probably expecting some corrections to come. Okay, all right, okay, so how to get the COT? I probably just make a video on that, but I've shared that with my students on how to get that, so I don't think I have a time to talk about it. Okay, so same thing with the COT and copper. So right now this is copper, right? I have a weekly chart, just kind of show in the monthly chart. So with the COT in copper here, for example, that we see that the peak of that COT is somewhere around here. So we are actually near to that high. We are in the net long situation for copper. We are not in the net sell, okay, net short situation. So each of the net short in the extreme value can give you some of the low point in copper. Okay, but when you have price which are in the net long of copper, right, like what we are seeing here, that it gives you the high point in copper. Okay, so copper is looking very much like a double top, isn't it? Okay, it might not come down immediately, but that as a gauge of economic health going into 2022, again, it gels in with the suspicion that we might have a correction. Okay, but I view every correction, a good correction, as a chance to buy. Okay, so I'm holding out and restraining myself at the moment. Okay, now, so therefore let's move on to STI. End of the day, we are concerned about what is close to us. So today I'm just going to cover number one, the STI, in case you are investing into the Singapore market. All right, for me, you do the STI, and I'm very selective, and bulk of my investment in STI, they will be the REITs and the bank. So I'm going to cover the REITs as well. Okay, and then I'm going to cover one US stocks, just to let you know, whatever that I'm covering here, right, I will have it. Not all, most. Okay, so just to let you know, I can be biased, but just to share with you more on the very neutral point of view. Okay, all right. So STI, if this is the monthly chart of STI, what I did is I make some projection. Okay, I have some levels here. So for 10 years, we've seen STI hovering into this range here. All right, what is the range? 10 years range, and I don't think that we can skip that. Okay, so that's the high range in the region of about 3,005, okay, plus minus, with the sub range around where we are right now, about 3,004. Okay, then with the low range, which is the support range here, around 2005. All right, I don't think that we're going to see STI back into this period here, where it's about 1006 or 1008. All right, before that would happen, the exchange would have already reshuffled the index already. All right, so the current price here is still part of an uptrend, but again, it is not at the low. Okay, it's not near the low. If there should be a range where the top is 10 and the bottom is, let's say, 1, we are not near the low. Okay, we are probably somewhere in the 7 perhaps to 8 level out of this range here. Right, so I'm holding resistance still very strongly at 3,250 to 3,330. So this is the very strong resistance I'm holding on. Okay, and that to me would affect mostly the banks. Okay, where are these resistance coming from? They are from all this projection, prediction, etc. that I've analyzed, but I've condensed them for you to only give you 2 numbers here. All right. Okay. Now, next would be the key levels in terms of support, right? So we work on the assumption that there might be corrections and it might affect STI, for example. But again, that before that correction comes, I just want to have a bit of a disclaimer. A lot of time that it might just go up a little bit to push higher towards that high, all right, before coming down. I'm not saying that after today, it will just tumble. No, I don't think that's what I'm trying to say. Okay, as again, stocks is probably one of the preferred investment. Okay, but in any case, key levels you want to take note of would be the 2 numbers I've highlighted, especially the lower one here. Okay, so we if there could be a correction, okay, if price might move down here, then 2,800 will be a level that I'm looking at. Okay, why is that so? Because it has the combination of structures and a combinations of also wash and rinse concept. All right, so you have just recognized that if it's beyond 2,800, for example, then the whole structure would point to further down. So therefore, I have to hold this level right now as the ultimate zone of support until to update later. Okay, so that's what I think about the STI. All right. Okay, now next, HSI. Now I wanted to share with you, and this is something that I did right back in, if I'm not wrong, okay, back in 2017. Okay, 2017, this period here. If you are and I have attended my market outlook class, and I still remember it was done in Shenton House. Was it so? Or maybe here, or here, I can't remember where is it already. All right, that definitely both times I've covered this. I've said that a very good opportunity for looking into the Hong Kong market, HSI, or whether Chinese market is to work on this recurring pattern. And I've shared this recurring pattern many times with my class. All right, and let me just rehash it here today. All right, so starting from 2000, all right, starting from where we get a little bit more active in the Hong Kong market, we can see this pattern where if you were to just mark this, let's say, as a low, all right, and the other one as a high, if Hang Seng HSI at that point of time in terms of that component retrace near to the 62% as the first indication. All right, but it will always do one thing. It will always try to push itself, right, to this magical percentage, which is 76%. Okay, so what I'm trying to say is that it goes like this. All right, things goes up, people get very, very enthusiastic, they will try to chase, but then when it come down, all right, they will try to buy, and the first level they will try to do it, they will be at a 62%, but no, all right, it would just stay at 62% and then move up a little bit and bounce again to this wonderful wash level, all right, that surprisingly wash people out of the market, but then that level will be around the 76%. Sometimes it can go to the 80% in terms of that leg of correction. Okay, so I can't say that it will definitely be at 76. Sometimes it can be at 74. You know, you guys know, right? Okay, so back in 2009, where there was the US financial crisis, same thing, the Hang Seng was not spared, right? It moved up from here, and it also first stopped at the 62. After that, it moved to the 76% and before rebounding. So what I did every time is I wait for this golden opportunity. All right. So every time when it's up, I will do this and repeat this, and then this time it bounce off at the 62%. All right. Then this, I will do this, and then this one first bounce at 62, the next one at 76%. Okay. Now remember last year, I talked about buying into the Hang Seng Index. Okay, it did the same thing. All right, we had this huge up. All right, and then after that, it corrected first at the 62. After that, it bounced off to the 76%. Okay, remember that I talked about it, and then it moved up. Okay, so the thing is that when it's at the 76% correction or 62%, it's cheap, right? But we are scared because then many times that we just don't know whether it will move down anymore. But if you look at what has historically happened, all right, and I think that there could be a high chance that we are near to some bottom because you know, it has to do with where the US dollar moves up and it starts to harvest into the rest of the countries in terms of the indexes. All right, there might be a chance that with the US correction, for example, the STI or the HSI might also correct again. Okay, but I'm suspecting that we are probably very near to that low level already. Okay, because historically we've seen this correction heading slightly beyond 76%. Okay, so I wouldn't say that they will not be tailed to move down this level here. All right, but we are probably looking at a market that hasn't corrected, which is the US market, versus the one that has corrected. We are probably very a little bit near to that bottom already. Okay, so that's my viewpoint here. Okay, now let's talk about the component. If you take a look at the component of HSI now versus the HSI 10 years ago, definitely the component is very, very different. Okay, so for example, the top of, in terms of the weightage, they are your tech stocks. Okay, the Meituan and Tencent. Then we have the AIA and HSBC. They are the finance, which is traditionally there. And then we have Baba. All right, then we have some of that tech again and the tech again, right? Okay, so what I'm trying to say is that the recent correction into HSI, they are led by really the tech companies. Okay, Baba is near to the IPO low. Meituan is not moving up anywhere, and Tencent is also near to one of the low. All right, and not bouncing. So the tech has really quite a fair bit of correction. So we need to be very selective. And I talk about one of the ETF with a 7% yield to go into, which can let you tap into this opportunity. All right. So this is something that we have to be careful not to look into the HSI overall ETF, but to be selective in the ETF. Because why? Apart from the traditional weighting, all right, that HSI is heavy into property and into banks, this time round the HSI is also heavy into the tech. Okay, so that's the change. All right, and I think that tech could be a little bit too expensive still, despite all the correction. Okay, so key levels to look at in case that you want to trade in the HSI would be about 22,000 level here. So that's the low 22,000. We can have a close below this 22,000. We can have, okay, but you take a look at the higher time frame chart, especially the monthly chart or the quarterly chart, it shouldn't close below this level yet, this level. All right. So I usually, for long-term analysis, I like to use the quarterly chart because that's where the fund managers also use that. That gives me a better look, right, into whether the market has really turned. Okay, so I'm interested in the long-term turn. All right. Otherwise, in the short term, HSI is still down. Okay. The HSI hasn't made that lower high yet. It hasn't made that yet. But I'm talking about a little bit more on the investment side. So for investment, I picked the bottom. Okay. Okay, so therefore, what am I trying to cover here? I've covered the indexes. I'm just gonna go into the specific stocks to look at or specific ETF to look at. What I'm trying to say is that while this is a market outlook, things can change very, very fast. Okay, and the indications can change very fast. So if you'd like to have an update, you can just join this Telegram link here that I posted. Okay, that's where I will record videos as I see updates and then post it up there. Okay, or you can just be a subscriber in the YouTube. All right, and the second thing is I think we need to be very, very selective. Okay, despite that there could be correction. All right, so let's number one, try to build your portfolio in a correction. Okay, number two is that try to be very selective, and I don't think that we're gonna have that overall moved up going forward in 2022. Okay, with rate hike, with the reduction in the tapering, I think we have to be selective. Okay, so what I did, right, is I identify which is a common theme, okay, which is alternative energy, something to consider. Second thing is that even when we have an oversold scenario, I want to look for high yield. What is this high yield here? Because when you have an oversold, it means that price is actually coming down. There's a chance for it to become even more oversold, which is for price to continue dropping, right? So to hedge against that price continue dropping, right, usually I ask for a slightly higher in yield, okay, meaning that for that constant money, so I can wait out a little bit, get money still while I wait for it to turn. So you have to see this as a different investment setting. All right. Overall, even though there is rate hike on the table, overall, I think it is still going to be a low rate environment. All right. Even it has to hike, I still think that the hike would be very mild and the roll rate will stay. Okay, so that's my point. All right, so we still continue with that investing. Okay. Okay, let me just get some water first. Okay. Now, so the first one I want to talk about is if there should be a low rate environment, if stocks is still in play, which I think so. All right, then where I still want to get a bit of a yield to have that constant income, all right, then I want to look at REITs, which is something that I'm looking at. Okay, so the first one is I want to be selective in REITs. I don't want to go for any REITs. Okay, by no means are this specific recommendation. I'm just sharing with you the REITs. Just give me a minute. Okay, so this REIT here that you're gonna see is ARE. It's listed in the US, right? Let me just cough a bit. I have quite a bad throat recently. Okay. So this REITs, right, is into life sciences firm. So for example, if you read carefully about the life sciences, it is providing testing buildings used for some of the life sciences firm, including those pharmaceutical company that's providing the vaccine. All right. The U is not fantastic. If you look at what is the U here, the U is probably about 2.9% only. Okay, based on what I've just captured. Okay, and the PE ratio is not that low, but it's not that high. It's not that extremely high either. Now, what I think is that the pharmaceutical life sciences, they above. Okay, you have to see the trend. The trend was that earlier we have the data center, which I covered data center KDC about 5 years ago. All right, that I talk about, data center, etc. I think that we are going into a little bit more specialized REITs right now. And one of the things that people realize is definitely life sciences. Okay, so this is one of the largest, if I'm not wrong, listed in the US. Okay, in Singapore, we don't really have life sciences REITs, apart from Parkway, which I talk about, which is a hospital-related REIT. Okay, so one of the things I want to bring out is this insider filings. Okay, recently, this is a filing date, which you can find in the website, is that a lot of the key personnel have been buying in the open market. Okay, buying in the open market means that you have to understand, right? If I'm insider, I know about the business, okay, and I take my own money, right, to buy into the market. Okay, so it's the reverse of what Elon Musk is doing. He's selling his own stocks. Okay, so when you sell your own stocks, I mean, you can give hundreds of reasons why you want to sell your own stocks. All right, but end of the day, if you are very positive about the company, all right, you don't want to go and sell. Okay, and then you want to buy because you have special privileged information. All right, so these people that I've listed, you can just go and check the website. They are key personnel in the firm. Okay, who are some of the key personnel? Who are they? All right, let's just change this. For example, this guy here, I know that's a little bit small. All right, he just bought in this amount. All right, on the transaction date, which is in November 15. Just bought in this amount. And who is he? He is the co-chief investment officer. Okay, so he's the one who is doing the investing. And in fact, that we've seen the EVP, who is the treasurer, we've seen the chief counsel also buying in during the same period of time. Okay, so this is something where I don't actively track them, but once I see that and I look at a chart, I get very interested. Okay, because then I ask myself, why would the key personnel be buying into the company? Okay, it means that maybe they are looking at it. Okay, so where did they buy? They bought, actually they've been buying already. Okay, but I mean, I just want to take a look at the technical side, right, which I always do. Okay, so these stocks, it's expensive, I know, but again, this stocks has been rising. Okay, it's rising, right? It has this base here. That means that each of them is a quarter. Okay, you know that this one is a quarter. So for 1, 2, 3, 4, 5 quarter, it has been actually going flat, and finally it broke out that quarter. Okay, and that price will be around about 180. All right, so on the October-November period, these people, right, starts to buy in. Okay, so this is very important key personnel. They bought in here and here, right? So that's the place they bought. Okay, and it's actually going up, so they make money already. But in any case, let's say there could be a correction. I'm not sure. All right, that the key level would be somewhere around here. Okay, so that's the key level here. Now, dividends are not taxable. Dividends are taxable, but they're already pre-tax already. That means when you bring it in, it's already taxed already. All right, but again, that is not, if you want to invest into a REIT and you want to invest into any life sciences, should you be very positive about life sciences, then Unfortunately, in Singapore, apart from Parkway, which is not really life sciences, all right, then the other one would be ARE, which is listed in US. Okay. Okay, next one, SG Reits. Okay, now I know that I talk about KDC many times. Okay, how many of you hope that you bought a lot of REITs, a lot of things during the COVID drop back in March? How many of you? I mean, if you look at it, right, you should have just close your eyes and buy the low of COVID low during 2020 March, right? I think that's something that we want to look at. But in the current environment here, there are opportunities which have corrected as much as a COVID correction. Okay, I mean, apart from those stocks that are not good, that has fallen, all right? But KDC happened to be one of them, Keppel Data Center, right, REITs, happened to be one of them that has corrected that much of its correction during the COVID period. All right, so it is not for once that I've talked about KDC. I remember and I note it, and then I say probably Binni is going to talk about KDC again. All right, but I'll give you the reason I want to talk about is here. But more important, let's talk about what happened during that COVID correction. During that COVID correction, price moved down by 31% and 81 cents. Okay, from the high. All right, now after that, it rebounded very, very strongly to second thing, okay? Hit a new high. So this is what we saw, all right? So a lot of people would be scared. I think a lot of people, right, would be scared to buy inside here. Agree? All right? But when you see that price going higher and higher, you can't stop yourself to say, what if this guy is going to go to $4? You want to jump in. But I don't understand why at the low you don't want to buy. People don't want to buy, not you. And why you want to jump when it's at the high. Okay? All right? So constantly, I'm monitoring for opportunities. And I have KDC, and I have really a lot. Because the first time I brought up KDC was in my market outlook, probably somewhere here or here. Okay, all right. I remember that I remember that, right? And in fact, that during where it had a drop, this one I posted into the alien room chat, and I specifically said, look, this is a place that you want to consider. Okay, now take a look at this number here: 81 cents correction, 31%. Okay, so usually what the market will do is that they will have a reference point, all right? So from the high to the current low, KDC has corrected 84 cents, okay, which is to me equivalent, 84 cents is here, equivalent to a COVID drop, okay? Although it hasn't corrected 31%, it shouldn't. Why? Because then the 31% is relative to the starting price. The starting price is higher right now, okay, from this measurement here. All right. So two things I look at. Number one is whether the company can make new high. The stock can make new high, which it did make a higher high here. So that's positive. I'm not going to go for REITs that doesn't make a higher high because it just says that fundamentally there's no endorsement. All right. And this guy, because of news related, has corrected a nice correction equal to what happened during the COVID period. Okay, so that's something for you to think about that. Okay, and the correction is until here. All right. Okay, next. I covered this one as well. Okay, Maple Lock, and you say, hey, look, she's gonna cover again. Yes, I am. I have my reason for doing so, for saying so. One of the reasons I look for, right, is I need acquisition. I need to make sure that the sponsor or the REIT itself is aggressive, smartly increasing its asset. So if it doesn't increase the asset, doesn't increase its AUM, there's no way that the DPU, which is the distribution, all right, that is going to increase. Okay, so apart from looking at the AUM, looking at the DPU, of course we look at, for example, the leverage. Okay, the average leverage, that means how much debt the REIT has gotten into. Okay, so after analyzing this, which is your job to analyze, all right? So I'm gonna just bring to you the chart. Okay, now same thing. If you look at historically, what happened to Maple lock, all right, was that during the 2013 to 2016 correction, it corrected by 44 cents. Okay, now during the COVID correction, it corrected by 88 cents, which is double that. Okay, but what happened next is that it make a new high. Okay, so this is the criteria that I choose. All right, because then of course then a lot of people went in to buy lah, huh? All right, it must make a new high to show that the strength of this REIT. Okay, the endorsement, the willingness for people to buy at a high. All right, and right now is a discount. So we talk about how much is the discount right now. So if previously it has corrected 32%, but the correction was 44 cents, from the high to the low here, it has corrected 43 cents, plus minus around that. Although the percentage is not a lot, but we have to understand that the percentage cannot be the same because the base will be different. Previously was about 130. Right now, the high was at 220. Okay, so this is the correction that is equivalent to this correction here. Although if you're asking for that 88 cents correction, now we are talking about the REITs coming inside here. Okay, I'm not sure whether with that increase in the AUM is going to come inside at the 140 region, but the first level probably, I mean, as a reasonable deduction, we are going to suspect a 44 cents correction here, which it did. Okay, the recent issue price for new Reits, it's about 1.84 if I'm not wrong. All right, so that's pretty much gives you a clue, but in any case, that if it did correct further, then 44 cents, 43, 40 cents would be a basis that you want to have a look. Okay, next. Okay, now same thing. This guy also had that correction. Okay, it's in the same as a little bit more of the logistic REITs, right? I'm not going to talk about how much yield it has. Okay, so this one is for you to find out. So I'm looking at number one, higher high being made. Either it's going to do a correction back into what happened during the COVID period, 120, if not a very good correction. Previously was about 78 cents. We had a correction of about 82 cents already. Okay, so I see that as probably something attractive. All right. Okay. Now, Maple Tree is also something I highlighted. It fits into that view. Again, it's something I kept talking about. I know that. Okay. It has this higher high thing. Okay. All right, and there's no other better correction because previously it corrected nicely in this channel here, but this time around the correction is a far deeper correction. So if we are looking at what happened previously at 1.17, right, then we are talking about 218, okay, which I mapped it here, 218 as the price. But if I am looking at probably price testing back into this channel, then we are talking about around the region of 220. Okay, so that's also. Now, last one, I have not stopped to mention about this. Okay, Parkway Life. Again, when I talk about Parkway Life, I remember that I talk about it so many times, and I hate to repeat this, but then these are the selection that I did in all my market outlook, and they've only proven one thing, right? They have corrected, but they have made new high. So Parkway Life has hospitals in Singapore, Malaysia, and as well as they are moving into a little bit of a life sciences, okay, providing buildings for testing and equipment companies. Okay, that's a small little part. And I happen to have a little bit of insight with the CEO. Okay, that one I can't review too much, but you know, this is one stock that has been trending up. So I like stocks not trending down. I like stocks which are trending up. and I like to buy on each of the corrections. So I always in my chart monitor how much it can correct. Okay, so I'm just going to point to you some similarity. Okay, and this could be a very nice trick, right, for you guys to monitor. Right, at this point here, when it corrected, and remember talking about this here. Okay, yes, I mentioned it about 220, 260, around this price here in my market outlook. All right, and then this correction was 50 cents. Okay, 50 cents here. All right. Okay, now take a look at what happened. This correction now was 74 cents. Now, this recent correction from the high was 75. So there's a similarity here. All right. So this to me, which is a COVID-related correction, is 124. That's an outlier. But we take a look at what's in the past, right? A 50 cents correction here was what happened recently as well. A 50-cent correction. Okay, so we have only two magical numbers, assuming that it will continue to trend. Of course, the best that we hope for would be a COVID 124 correction, all right? But we have two magical numbers here, a 74 cents correction or 50 cents correction, which happened. Now, if this guy ever does correct, ever, I don't know where is the end point. It can continue to go up because it recently bought into the Japan nursing home, if I'm not wrong. All right, so if it ever correct, measure from the high, either a 50 cents, all right, like this, or either a 74 cents. Okay, so that's what I can share with you. Okay, you mean for this Parkway Life? It might though, but every head and shoulder does before the head and shoulder can happen, right? It will always be a higher high. Okay, so if you want to have that recurring income, then REITs will be something that I've been building for years. Okay, as I mentioned that, I mean, to be very frank, I look forward to every month, every quarter, money inside. That really grows the whole portfolio. Okay, so I don't want to be trading very aggressively when I'm hitting 60. You guys are growing with me. Okay, so that's the reason why I wanted to talk about investment. Okay, pick bottom with a twist. I'm a little bit I have to catch up. All right, so I have quite some more to share. I want to do it a little bit faster. A lot of people likes to pick bottom. Okay, for example, if you take a look at BABA, whether it's the US listed or whether it's the Hong Kong listed 9988, right? It has corrected $210. Okay, and it's corrected 65%. All right. Now, I'm not saying that you should be picking a bottom because, as I told you many times, right? I like to wait for an uptrend and I like to go for that correction. So BABA doesn't fit that bill. Okay. However, now if you want to build the investment, there are some stocks that still gives dividends. All right. There are some unit trusts that has BABA in it, for example, or some investment or some other Tencent or some other tech stocks in it, right? They are still giving dividends. Okay, so you might want to choose this type of giving dividends and waiting it out, but please don't pick bottom when it's like a falling line. Okay, so when I pick bottom, it has to be specific with a reason, such as, for example, just giving an example, I'm not saying you buy BABA, it is near to the IPO high. Okay, so BABA, this is the US listed stocks. It's near to the IPO high at this price here, about $100 plus. Okay, so if you think that overall in the long term that is going to rebound, then pick bottom must have a technique. It must go for important levels such as IPO high. Okay, all right. So that's one thing. You can go Tencent, you can go Meituan, you can go those tech stocks that used to be hot, but you must find your reasons. Okay, reasons such as, for example, IPO price. All right, now going forward, okay, I am quite bullish in the exchange. Okay, not because I'm actually doing courses for SGX, but just generally. All right, because if we are still going to trade, and I know that this exchange would be doing a lot more derivative and they still give good dividends yield. So this is also how I judge for a lot of stocks. I just draw simply how much they have corrected, and I look at the technical signals at that point of time. Okay, as I mentioned, trading technique and investment technique is very different for myself. Okay, investment, I want to pick the bottom but with a twist. Okay, so same thing for SGX. This place here is corrected $4.33. Earlier it has corrected a 25% or 276, and this one corrected about 26%, $3.13. Okay, right now already. All right, I'm actually hoping that it might do the same correction as this place here, which is $4.33, and that would be very much looking at this place here, which is in the range of $8. Okay. Yeah, I'm not saying that the yield of Parkway is probably about 2-3%. I can't remember already. I'm not saying that Baba is something that I want to buy. I'm just saying that if you want to pick bottom, all right. So these are some of the stocks that has bottom, but we need to pick them with a twist, okay? And they must be near to some key levels, all right? Okay. Now, likewise, if you are positive about the exchange, then I'm more positive about the Hong Kong exchange. Okay, I've been monitoring the Hong Kong exchange, and in fact, that I've made quite a fair bit of money from the Hong Kong exchange, because to me, that if you want to if you take a look at investment, it's not going to go away. All right. In fact, that I think that people are going to pile more money into it, and more stocks are going to get listed, etc. All right. So I'm looking at each of the correction. I'm actually looking at very much key levels. Okay, key levels, right? So Hong Kong Exchange is one of the company that doesn't correct a lot when, for example, the overall index and the tech stocks has corrected. Okay, so I like a correction. I like to pick corrections when it shows this type of scenario here, such as, for example, it can move to the high that it broke. Okay, so I always remember these prices. I always remember, all right, prices such as, a high. Okay, so in my mind, Hong Kong Exchange 280, 280, 280. Okay, I know that's a little bit far-fetched because right now it's 450. All right, but 280 is something that I will remember. I will just cycle myself to say I want to know 280, 320, 3 something. So that's the magical price I'm looking at, and that is the basis. For example, when it ever corrected until this magical price I'm looking at, right, is a 48% correction, which fit into this number here, 48%. All right. Of course, I do understand that not always that it's going to have a 48% correction. Sometimes we need to look at the number. For example, the magical number for this correction was 217. If it's 217 here, which I sort of extrapolate, it will be near to this zone here, which is something that I'm also interested. So I'm paying a lot to all these numbers, and sometimes I will write them down, I will key them, and I don't take a look very often, for example, the stocks. But when there are key levels, when there are these very attractive numbers, I want to remember that. I want to take a look, and these are my homework that I have. Okay, I will do all these homework. I don't buy investment irrationally. I don't buy investment based on tips. I look at these levels slowly. Moved in to build that portfolio. Okay. All right, so the numbers for Hong Kong Exchange, if you are still bullish about it, will be the two numbers I mapped out. That would be somewhere around 360, 370, and of course the magical number that's about $300, right? Okay. All right, now let me just continue on. Okay, now last one. So we talk about the Hang Seng having a correction, right? We talk about the Hang Seng having that 62% correction followed by 76% correction. Right? We talk about that. Remember that? Okay. Then we talk about that a huge component of the Hang Seng index. It's tech stocks. Okay, and tech stocks is the one that's driving it down. All right. So I do not think that I do not think personally I want to look at the overall Hang Seng Index, but I want to be selective and I look at the Hang Seng Index, right? Selective one, and the one that I'm focusing on is this one, which is 3110, that has a yield of 7.3% at the time that I took the data. Okay. It might change as price move up and down. All right, so it went up a little bit, but I mapped in the 62% and the 76%. Okay, so these are some of the price level. So this is an ETF, all right, that took 50 stocks that is in the Hang Seng, all right, that has the highest dividend yield, and then it's giving this dividend here. Okay. Which I see that as reasonable, not bad. Okay, all right, so you might want to look into this one here if you are interested in the Hong Kong market. Okay, some trends here. All right, I'm bullish in energy. I've seen a lot of energy stocks, right? In Hong Kong, in China, in US earlier moving. But if you look at what the whole world is moving into carbon neutral, into clean energy, this is an area where, apart from the frenzy in tech stocks, something that we really want to have a look. All right. In the Hong Kong, there are a lot of ETF that covers this as well as in the US. Okay, so I'm just going to pick some, because all these are my homework. All right, so for example, this is one that is listed in the Hong Kong. All right, and then they have two. Okay, one is in the HKD, which is the Hong Kong dollar. The other one is the USD. Okay, so the HKD and the USD, they have different codes. For example, the HKD will be 2809. The one, if you want to buy in US dollar, will be 9809. Okay, as I mentioned, the currency does affect our return. Okay, so previously there was a correction of this extent here, 38 points and then 28%. Okay, price is at the high, is a little bit toppish. You might see this head and shoulder pattern definitely, but as I mentioned, I look for correction, and a correction of 38 points will hit right into this point here. Okay, so that's usually how I invest, right? If you want to be involved in the US stocks, then we have the ICLN, which is also on clean energy. So same thing, it is correcting, all right? It's a very nice move after COVID, all right, where people are crazy, they just park money inside there. But if you just buy right at the top, you'll be hitting at the top of, let's say, $32. Okay. In fact, I know that a lot of RM, relationship manager, ask people to buy in, including myself, and I refuse to do that because I don't know how to buy at a high. Okay. So if you are talking about correction, I'm looking at this number here. All right. And that would be probably in this region like this. Okay. And you can use that as a reference. It's around 18 or it's around 14. Okay. Okay, so that's this one here. Now, EV clean energy battery, it's something that I've been investing as well. So I invested in this ETF. So again, on correction. So I look for a trend and I invest in them. So if you think that EV going forward, battery, it's going to be hot. So rather than to be stock picking, all right, then you might want to look at ETF. So I just put in here one of the ETF, which is 2845 for the EV, all right. And again, if we are looking at a neat correction, so it's either a 14%, $28, which is expected to be somewhere here. But if you like to have, let's say, really, going forward, right, there could be some correction in the US market resulting in a correction in the Chinese market and the Hong Kong market, then these would gives you that very nice correction here of about $54 right into this high here. Okay, all right. So these are the themes. I'm looking at clean energy. I'm looking at REITs. Why I'm still looking back into REITs? Because I think that the rate hike is going to happen, but not significant. Okay, so therefore still looking back into REITs, and I'm looking at the EVs and battery, which are common theme right now talking in the market. Okay, Now, it's 12 now. You might have an appointment, but just give me another 10 more minutes because I want to talk about, and I can't answer all your questions. I want to talk about going forward. Okay, the going forward is very important to me because I want to let you know that I'm here still another maybe 1 year. 20, I'm still going to do the market outlook 2023. Okay, so we are lining up a lot of things going on. Okay, so some of you have already taken the A-level wash, but we are growing in terms of age as well, and I want to make sure that whatever that I'm doing right now is preparing for that, for me hitting into the 5 and hitting into the 6. You know what I'm talking about. All right, I don't want to be always staring at the computer. So therefore, the movement I always do is into automations. All right. But I also don't want to say that with automations is going to be a golden goose and it's going to be there. So we have a lot of automations right now in the Alien Wash. The next one we're going to launch is the Trade Manager. Okay. So we launched this year the dashboard, which gives you that signal, and then you look at the yellow color, you use that as a clue. All right, so the dashboard is going to go through an upgrade, but to link with the new launch, which is the Trade Manager. All right, I've announced this, but partly because of the complexity, the programming is very extensive. Okay, we are doing the testing right now, very, very aggressive testing. All right, and the key thing, number one, is that it's going to have this auto and manual entry. I know that I still want to have control of my trading. Therefore, I will always set in a manual override. Same thing when you're driving, right? You can press the button, the car can park for you, but you always want to check in case that, software or whatever AI goes down. Okay. The next one is auto management, auto trade management. All right. It has a trade panel, so we don't need to go to the back end, and in the panel we can just click, and then we can just set our orders, and then we can just trade it from there. Okay, then it's gonna have this auto trade management, where the key thing is not only about the target profit or the stop loss, but you will control the overall risk of your account. Okay, meaning that we are looking at overall what is the account doing, and we have this function which is keep to bet. Okay, now I won't call keep to bet. I will just go and do a very nice name later on, but I can't think of any nice name. But we're gonna take a portion of what we earn, keep it, and then we're gonna take the rest to go and continue to plow into the market, but we're gonna retain a comfortable portion. It replicates the model of the reserve ratio that we use for the money flow, and it creates this multiplier effect. Okay, so we're gonna have this extra thing which a lot of trade managers doesn't have, which is the auto add position. That means that keep where the overall basket will still be profitable, and then bet, all right, where that money that you bet will result in a multiplier growth with auto position adding. Okay, so we are expecting that to happen next year, Jan 2022. This is the reason why I'm taking a break. Why? Because I'm actually preparing for this, and even though I'm not doing the weekly night classes with you guys, and I stopped a lot of classes already, every day we are doing the testing live. Okay, now apart from this, I just do a little bit of not promotion, but I think that this is a promotion that's going to end very soon, and it's a very good deal. All right, for some of you who hasn't gotten this, it basically means that if you take the TOR course, all right, you pay $700, the $700 will be fully refunded into account with terms and conditions, all right, and that refund will be in cash, all right. And I know that a lot of you guys have already gotten the refund, guys. True or not? Because you have you have told me, some of you wrote to us to say that you have gotten the cash already inside. And in fact, the feedback for this promotion is you don't expect that the cash will be in. You don't expect that it's a full refund, but in fact it happened. Okay, so you can just go to this link here, scan it, and then go there. All right, I'll type this link later for you guys. All right, but try to get it because the promotion ends 30th. In fact, it's 31st of December. As you know, I always put one day earlier, 30th of December. Now, it doesn't I just talk about more of the promotion, right? It doesn't mean that you have to fulfill that volume, because it has three components. One, you have to pay for the cost first. All right. Second component is you have to apply for an account with the participating broker. Third condition is you have to fulfill the volume. Of course, you have to fund and fulfill the trade volume. All right. So the trade volume can be either one lot or two lots, and people get confused about what's that. All right. So basically, if you trade into the forex, let's say euro dollar, all right, if you can fulfill one lot or two lots in total accumulative, you're gonna get the $700 into your trade account. Okay, the $700 will be refunded as cash into your trade account. You can withdraw that cash. All right. So in another way, right, the cost fee is fully paid for. Now, why do I want to encourage this? That's because in the future, or rather, any indicators or any experts advisor, including trade manager that we are going to develop, would be put inside the whole alien room as a support package. That means that there won't be any individual subscription. Everything will be inside the alien room, including our weekly webinars, including our indicators, including our lessons. Everything is all inside there. So in order to get any of the updates, right, you need to have this alien room. Okay, so the cost, okay, that means the $700 include a 12 months subscription into the alien room. 12 months. All right, and these would be fully paid for if you meet that criteria by the broker. Okay, I know that you might not be interested in this because then you're not trading, but as I mentioned, all right, to get into the support, you need to have the alien room. So if this is something the brokers is going to pay for you, why not? Okay, and a lot of people ask, then how do I meet that volume? Okay, one thing I've shared with you, very simple. If you don't mind losing your spread, you open and close immediately one lot of euro dollar and do it twice, and that's all. And the funding, in terms of funding you need to meet, right, range 2,000 to 5,000. Okay, one broker is 2,000, the other broker is 5,000. All right, and all these belong to your money. You can withdraw that later on. All right, so I'm just marketing this one in any case that you're interested, because, all right, the last date according to XE, they have not told me that they want to renew. All right, usually they will look at the performance and then they will say, okay, I want to continue, or I don't want to continue. All right, so for XE, it's until 31st of December, which means that you have to pay for the cost, $700. You have to fund the account, apply and fund the account. All right, before 30th of December, but you have 3 months after 30th of December to fulfill your volume. Okay, it means that you don't need to in a hurry to fulfill that volume. All right, and the $700 will be refunded to your trading account. How many of you have gotten that? Let me know. I just because I think that it's not believable for $700 cash, but in any case, you know, can I have a feedback in the chat that you have gotten this money in your account already by fulfilling that simple criteria? Okay. Now, I'm just going to show you the link here. Just go to the link and then just, you know, apply for that, because we are coming near to the end and the promotion is running towards the end. Okay. All right. Now, any last questions I can answer? Because I come towards the end already. I know that you have a lot of questions. I can't answer that. So I'm just going to selectively go through the questions before that. Is it easy to fulfill the two lots in FX? As I mentioned, right? The idea is really if you can trade that, okay, trade. I don't think it's tough, okay, because you have 3 months to fulfill that, okay. And then if you don't mind, let's say you make a funding of 2,000, but I think seriously, if you want to be in the trading and you want to trade good, right, 2,000 is not enough, okay. I would encourage a $5,000 funding, not a lot, like you got to put in 50,000. I don't encourage that, and I don't do that myself. Maybe a 5,000 or 10,000, and with that you can trade one standard lot every time. So you open and close euro dollar, immediately open close, right? You will lose your spread, which one standard lot you're gonna lose about maybe like 10 USD, and then you open and close again, you're gonna lose 10 USD, right? And you will meet that two standard lot already. Okay, you're gonna lose $20 as your spread. Okay, but in the end you get $700 back into your cash account. Okay, into your trade account, right? So $20 or maybe $30 loss versus $700. I think that's a very good trade-off. Okay, try to get it before the end. Okay, so let's say for example, if you are only on the Alien Room subscription and your subscription is coming to an end or going to come to an end, get it. Why? Because XE also applies for assisting clients, also assisting XE clients. All right, get it so that it can help you renew your Alien Room and you can continue with the support. All right. Okay, move my face. Okay, I tell you what, let me just close. Let me just off my face. Okay, just give me a minute. I off my face. Okay, now no more face already. Okay, so yes, you fulfill it within 15 minutes. All right. Okay. Any views on gold and silver? I just talk about gold only. If you guys are still staying with me for a while, gold, I think it's still bullish. Okay, I'm still holding on to my gold. All right. Silver, I don't have a lot of comments because I don't do a lot of silver. All right, but I think gold would be something that you want to look out for. Okay. All right. Still bullish in gold. I mean, to hedge inflation or whatever you want to do that. All right, but still in gold. Okay. XE would have CFDs, BB would have CFDs. Yes, they have. All right. What do you think of the Chinese stocks in the US exchanges? I think that it's better. A lot of China listed stocks, because of what China is doing right now, a lot of clamming, a lot of regulations. It is probably better to trade into Hong Kong using the Hong Kong exchange and not to do in the US exchange. Okay, we've seen even Xpeng listing in the US and then also dual listed in the Hong Kong exchange. I think that this trend will continue. So I prefer very much, if you want to be involved in the Chinese market, to do it via the Hong Kong exchange. All right. Yeah, thanks a lot for answering the questions. All right. It's really very fast. So get that $700, all right, and then try to get it before the end, because I seriously do not know whether they would continue with it or not. All right. Okay, so let me just show the contact. Okay. Okay. So I've come to the end already. I probably will just stay here to answer some of the questions. Let me know what are the questions you have. If you just want to put it again, because I'm scrolling back and I don't know which one that you're interested in. I know that there are some questions on okay, crypto in 20. I think crypto is very why. Okay, so in terms of my observation for crypto, it has to do with whether the market is having risk or no risk. Okay, so for example, let's talk about Bitcoin. I also trade in Bitcoin. I don't invest in Bitcoin. All right, let's talk about Bitcoin, right? You start to observe that actually the Bitcoin coming down, correcting before the stock market corrected. So it has to do with a little bit of a risk is on or risk is off with the market. All right. I'm personally thinking that as long as the risk is off for the market, the crypto will correct. And then when the risk is on, the crypto will go up. Okay. So I bought earlier into Bitcoin around the 40,000, right? And I sold that with a $18,000 to $20,000 profit. Okay. Right now I've not done anything because I need to look at the signal again. All right. So I do not think that Bitcoin, like the stocks, would be that smooth sailing going forward into the next year, 2022. Okay. Personally, TerraSeeds would be developing into the play to earn game, just to let you know. So if you are interested, contact me. We are venturing into this aspect. All right, in our another the trade manager in MT4, MT5 would follow MT4 once the MT4 has finished testing. So it's a very, very extensive project. It's one of the projects that took a lot of time to program. So MT5 would come after MT4. Do we use the DXY to track gold movement since they are correlated? Yes, I do, but I think that it's a little bit different right now. Is not that same. Okay, so we've done this with this thank you slide. You gotten all the link already. So to go inside to apply for the account is our website. It's bit.ly/tor2266. Let me just go to the chart since there's still some more questions and you guys are not living yet. Okay, so let me just take a look into DXY. Okay, so this is DXY. And then I just talk about, I know that there was a question on how to do the overlay. So just press this button and that's it. Let's say I want to overlay with gold, right? I just choose this. I can do the same scale, or I can do a new price scale, or do a new pane. Okay, so I'm just going to do a new pane underneath there. All right, so this is the DXY. Okay. If you take a look at gold, what happened to gold has a different setting. And I talk about gold potentially might be forming this huge cup and handle. So this I insisted and I still think it is true. Okay. Whether this handle here is going to do a bit of a correction further, I have no idea yet. Okay. But definitely is one of the assets you want to consider to fight inflation. So apart from the few stock themes, investment themes, high yield that I've talked about. All right, so gold is one of the investment that I think you might want to consider. Okay, for me myself, I buy gold bar. Okay, don't ask me where I stay, so I'm not gonna tell you. My location continues to be secretive. Okay, but and anyway, I think that the DXY tracks gold a little bit, but it's not a total track. But with this, if there should be an indication, all right, I think we should just be looking at gold itself directly, and then definitely some of the levels here. And I said already, gold should not break below 1700. Okay, I have my reason to say that, and I said that many times. It shouldn't go below 1700. Anything around there, it could be about 1680 or 1650 would be still seen as a good investment point. Okay. We have to trade 2 standard lot for promotion. So minimum capital is 5K USD. I always encourage, for example, if you are earning in SGD, to fund in SGD. If you're earning in USD, to fund in USD. Okay, so fund in the currency that is relevant to you. I think that to trade into 1 standard lot each time, okay, for the FX, you need about 1,500 USD minimum. So I guess that if you are open and close each time, all right, then that would be 2,000 USD to be safe. Okay, so yes, I do agree with 5,000 USD minimum as a capital if you want to be serious about it. But if you really are just about hitting that volume, then a 2K, would let you meet the minimum criteria. And my condition is that you open and close immediately. All right. Unfortunately, no. For US stock, for Hong Kong stocks, you have to go and find other brokers. Okay, all right. Okay, now I've taken up a lot of the time. Let me know, for example, let's say if there could be orders, a bit of a live streaming, and you want to cover into stocks, huh? You want to cover into investment, or do you want to see it often? Because I can do that, okay? Because I also need to make sure that you guys want something like this. And then what are the things you want me to cover? Okay, all right. Okay. A lot of people following me to your home from Orchard. Yes. You know, when I bought the gold bar, I thought I bought a lot. I was very pregnant. I was about to give birth already. I thought I bought a lot. I see the man right in front of me. He took out a stash. Maybe the stash it's like 15 centimeter tall, $1,000. Oh my gosh. Whatever that I bought, right, is just little compared to him. Okay. Um Tor can only use on the two brokers to trade forex. No, Tor you can use any brokers to trade the forex, okay, or to trade the CFDs. Okay, it's just that for the trade manager, I explained already, would be only activated gradually into different brokerages upon our test of the price feed. And the first one that we have tested is the two brokers, XC and Blueberry. Therefore, you will only be activated into these two brokers only. All right, so that to make sure the price feed is okay. Okay, all right. So you want every quarter or semi-annual. All right, so we take that into consideration because stocks is something I'm doing. It's just that sometimes I get a little bit lazy. I don't actively do it. I don't actively market. Partly because a lot of my work is in the automation consultancy. So I do help a lot of companies do that. So it gets really crazily busy. Yes, correct. Bring luggages to buy gold bar, right? Correct. I don't have, I don't have that pile of money to buy, but I really bought quite substantial before I gave birth, and the price that I bought in, and I told you guys that that I'm going to buy gold after it, and my and I bought here because I bought here my yeah, around here, this one. Okay, this is the place I bought because my daughter was born in 2013, so I was really very pregnant, but it went down a little bit, but yeah. Okay. Okay, so thanks a lot. I'm just gonna end the session. Same thing, please go and get the promotion if you can. All right, so with this a few. Oh my gosh. So that person I saw with that pile, not a lot, huh? Will you guide the newbies to trade forex if signed the course? Would I guide the newbies? Yes, I will do that every Tuesday and Thursday, but mostly in the Thursday session. Okay, Thursday session. So I will do webinars, all right, and then you can view the recording of the webinars. I will also be recording how to use all these indicators. Apart from me guiding, right, I think a lot of time is you have to take an active approach to watch the videos. Unfortunately, I'm being very frank here, all right, because I've recorded all this. You must go and attend the lesson, and then there will be this monthly, weekly, twice weekly webinar. Okay, all right. Okay, don't buy a luggage for travel. Buy a luggage for your money, huh? Okay, let me know when you're going to the bank. Okay, I follow you. I will follow you if you bring a luggage also. Okay, thanks a lot. I see you again next week. Not next week. Start the year, and then with this I end the session, and very nice to meet up with you. For those guys that have not seen for a long time, all my very 15 years of students, 10 years, some 8 years, some 15 years, I hope for another some more 15 years to go. Okay. And then enjoy yourself this holiday. Don't eat too much, as I always, and exercise more and be very healthy. Okay, I see you guys next year. All right, thank you. Bye bye.